I'm Joanna Simpson here at Risk Minds International in London. Joining me now is Jonathan Mascie-Taylor, Managing Director of Render. Thank you very much for joining me today.
Thank you for having me.
It's a pleasure to have you. And tell me a bit about your background and what is Render?
So my background is I used to work in consulting, so I wrote lots of PowerPoint decks advising people what to do and how to make things better, but never actually having to deal with the reality of that. So joined and helped set up Render, which is part of a broader company called Fintern a few years ago, to really help actually make better credit decisions for individuals, particularly in people that are not necessarily served that well in the market today. So people that struggle to get access to credit, people look at their credit file, they're instantly denied. But using things like open banking, other sources of data to help elevate those people's risk position, help them get them onto sort of credit ladder and being able to borrow money, and help improve their financial well-being.
So just tell me, who are your clients? So
we work with a huge range of clients. We work with smaller startups who are looking to embed lending into their proposition. So that's anything for people that are providing healthcare, who want to be able to provide finance, that's sort of that point of sale or the point of doing the healthcare work, through to new mortgage providers or other sort of types of startups, people working to do new financial products to help different people. We also work with the high street banks, helping them take the analytics we developed using open banking to help them deliver sort of better analytics to their existing customers. One of the drivers that they're particularly seeing at that end is the consumer duty regulation that came in last year, and that's encouraging banks to really think through what's best for the customer in any given situation. Am I really doing something that's in the customer's best interest? And using the additional wealth of data and decisioning that we provide really helps understand the customer's position at that time in a sort of very unique way. That means they can help really get to the bottom of that decision and make sure they're doing something that's impactful and relevant to their customers.
And what impact do you typically see?
So it varies, of course, depending on the context. For some of our smaller clients, it's just about getting into the market and helping them lend. On the pure risk spectrum, where we started using additional data sources, including things like open banking or transactional data, we've typically seen a 70% drop in default rate versus what the sort of market PD would look like. So I put that into a better example. If you lend to 10 people, you might expect that one or two of those would default. Based on the results we've seen on our own lending and using the platform, we've seen that drop to more like half a person or just one person defaulting.
So are you observing an increasing adoption of open banking?
So I think we're seeing a gradual shift in the market. So I think open banking is something that's been talked about for several years. It was sort of initially seen as a panacea, then people got nervous and it hasn't necessarily found its true use case. I think we're beginning to see it uptick again and people are using it in very specific purposes. So people are using it for referral cases or broader cases. And in a very targeted and effective way. So it's becoming much more useful than it was before. It's sort of let's find reasons to reject people. Now it's being used much more to say, how can we expand market? How can we offer credit or other services to people that potentially wouldn't get it otherwise?
Jonathan Mascie-Taylor from Render, thank you very much for your time today.
Thank you very much.